Hello, you're welcome to Fininvest Niger. My name is Tom Princeville, and I'm a securities and investment specialist, and I've been investing in the Nigerian market for the past 2 decades. So I want to present to you my portfolio management service. The service is designed to kind of assist you to optimize your portfolio by carrying out a rebalancing of what you have, taking out what's supposed not to be there and bringing in stocks that's supposed to be there with a desire to actually elevate your game, elevate your gains in the market. So if you are interested in that service, you could then contact me on this line. Let me see how I can come in and assist you to manage your portfolio for better results. As you are starting your investment journey, or even as an experienced investor, you could benefit from this service I am providing to individuals who are interested. So, I want to look at the fundamental analysis of Dangote Sugar Refinery. Dangote Sugar Refinery is a company in the Dangote staple, actually. So, we want to see its a full year audited result as is represented, on the board here. So, we discovered that the company generated a revenue of 665.690 billion naira, 665.690 billion naira, as against 829.215 billion, 829.215 billion naira in the full year 2025. This represents an increase of 24.67%, an increase of 24.67%. So we also want to consider the company's gross profit. The company generated a gross profit of 31.109 billion naira, 31.109 billion naira, as against 122.629 billion, 122.69 billion naira, giving us an increase of 294.2%, 294.2%. That's right. That's encouraging. We also want to consider its operating profit. The company generated an operating profit of 12.671 billion, 12.671 billion, as against 96.130 billion, 96.130 billion naira, giving us a percentage increase of as high as 658.7%, 658.7%. Now, this is where the story took a negative turn, took a downward trajectory. So, for the profit before tax, all right, the company recorded a loss instead of profit. The company recorded a loss of 270.894 billion naira. The company lost 270.894 billion naira. This was the losses sustained in the year 2024, as against 72.279 billion. If you observe carefully, you discover that the level of loss, the amount lost here, has reduced drastically from 271 approximately to 72. All right, so they say that particular reduction in losses to the tune of 73.34%. That's quite an improvement, actually. The loss figure, the loss generated has reduced from this value to this particular value. Then for the loss after tax, not profit this time around, but the loss after tax here, the company generated or sustained a loss of 192.617 billion, 192.617 billion. So the loss figure reduced from this particular amount to 64.117 billion. It reduced from approximately 193 down to as little as 67. There's a progressive reduction in the loss sustained by the company, representing a 66.70% reduction in the loss position. We now come to the total comprehensive income. The company generated a total comprehensive income of 132.982 billion naira, as against a comprehensive loss, total comprehensive loss of 82.248 billion. 82.248 billion naira was the loss sustained here, which gives you, a downward decline, in percentage gain here of about 161.84%. Okay, this is negative. The company went down, went downstairs, took a downward, dive by this particular percent, 161.84%. So for the company's earnings per share, as we all know, is the most important value, the most important figure in this table in our overall analysis. Unfortunately, the company recorded, a kind of negative earnings per share. All right, there was a negative earning per share of 15 naira 86 kobo in 2024, compared to 5 naira 28 kobo in 2025, representing a kind of improvement in the loss position by 66.71%. It's an improvement. The company had a negative earning per share to the tune of about 15 naira 86 kobo. This time around, that's kind of improved, though still, in the loss zone of 5 naira 28 kobo. Okay, and so the company, share price as of recent is 74 naira 70 kobo. All right, 74 naira 70 kobo compared to 52 naira, in the year 2024, representing an increase of 43.65%. 43.65% is the loss position, is the increase in the company share price here. All right, and so we are done with this segment, this aspect of our analysis. This is the profit and loss segment. We want to also highlight the cash flow as well as the company's balance sheets. And so this leads us to the share price. The share price, the shares outstanding, rather, the share outstanding is 15.15 billion. 15.15 billion is the share outstanding. And not only that, the company has a market capitalization of 907.4 billion. 907.4 billion is the company's market capitalization. We should not also forget the company's equity. Equity here is something like the shareholder funds, and it is a difference between the company's total assets and its total liabilities. So when you subtract both figures, we are going to arrive at 129 billion naira. 129 billion naira. Then for the equity per share, you simply divide the equity by the number of shares outstanding. That will give you the equity per share. And the value here is 10 naira 62 kobo, which represents the company's book value. So generally, you compare the book value, you subtract the book value from the current share price. If you have a larger figure, that means the company is expensive. And if you have a smaller figure, it shows the company is not expensive. Okay, and so for the cash position, the company has a cash equivalent, cash in the bank, and cash at hand, amounting to 24.23 billion naira. 24.23 billion naira. Okay, so we come to the company's PE ratio. Unfortunately, the PE ratio is nil. All right, there's no value attached to it, because you are dividing the share price as expected by a negative earnings per share. It's a negative earning per share. So that will give you, you know, an irrelevant kind of number here. So for this particular presentation, you can actually determine the company's PE ratio. Is it cheap? Is it expensive? You can't really tell. But the PE ratio is nil. Usually, you don't allocate PE ratio to a loss-making company because the value there is negative. Okay, so should we invest in this company, in Dangote Sugar Refinery? It all depends on your investment strategy. If you're what is called a turnaround investor, turnaround investors invest in companies who are actually, are improving in terms of profitability. All right. Though they are loss-making companies, but at least they're making improvement, towards eventually making profits. So if you have that strategy in mind, you are a turnaround, investor. You can invest in this company because, as you could see, there is an improvement in all these figures. You know, the loss figures are kind of improving, are getting lesser and lesser. Hopefully, in the next 1 or 2 quarters, the company will turn a profit. So if you invest early and eventually it turns a profit, you are going to benefit, immensely from the turnaround the company is undertaking at the moment. So if you're not a turnaround investor, I will advise you skip this company and go for better opportunity out there. But if you are inherently into turnaround investing, then you can go ahead and buy this company because eventually it's going to come out of the loss, zone and go into profitability, obtain profitability later on, become profitable later on in the future. Please, you like this video and subscribe to this channel if you've not done that. Help me share this video to people in your community. And not only that, you should like this video as well. And if you want me to render a kind of portfolio management service for you, please don't forget to contact me so that I could be of help to you. Thank you very much for watching.